and ask all of you, how many of you made some money this morning in your stocks? I want you guys to let me know. Look at your portfolio real quick, and I'm going to open up mine and try to see if those gains. Yep. I made a lot of money today, and you probably made money too. And the reason I know you probably made money too is because if you are investing the way that we've been talking about in class since the very beginning, you're probably pretty well diversified. You've got your money spread out enough such that when the market has a good day overall, chances are you're going to have a good day too. So a lot of you probably made money today. And this was and actually yesterday on the Black Financial Channel, I talked about this. I referenced something that the technical term might be reversals in the stock market, but basically, another funny way that people describe it is what they call the dead cat bounce. The dead cat bounce is when the market just drops so much that it has a little bit of a bounce at the bottom, right? It may not bounce all the way back to what it was before, but it's like if you drop a cat off a bridge, it's going to maybe it hits the ground and, well, maybe it's isn't a perfect analogy because maybe cats don't bounce, maybe they just splatter. But you imagine it hitting, something hitting the ground and bouncing up, maybe halfway up to where it was before, right? And so effectively with stocks, this dead cat bounce is something that's pretty common, largely because the market tends to overreact. What tends to occur is that based on human behavior, and you guys know, my dissertation was on financial psychology. And one of the things that I've always believed that is, I believe confirmed in research is that when these overreactions occur, when the market sells a lot, there's a lot of emotion behind it, a lot of panic selling, a lot of fear that drives additional selling. And then what happens is that you come back and you say, okay, maybe we went too far, maybe we pushed the price down too much, right? Or then maybe people come in also and say, oh, well, now this is a buying opportunity. This stock that would have cost me $50 last week, it's now $45. Now it's actually a good purchase based on what I believe about this company, right? So a lot of the selling isn't just driven by economic information and fundamentals. That's why it's very important when you see a price movement. Rarely do stocks move without something happening, without there being some sort of information. And information is, it's kind of like maybe basketball players, right? Just because I say I play basketball doesn't mean I'm Kevin Durant, right? Like there's different quality levels of basketball players. So just like with information, there are quality levels of information. There's some information that's true and accurate, impactful, and maybe devastating to the stock. Then there's some information that doesn't mean anything. It's just a rumor. So you think about it when somebody's talking to you about another person. There's a difference between things that they know for sure that actually matter versus things that they heard from somebody else that doesn't even matter. Like, oh, I heard that that he's missing a left toe. What do you care? And you don't even know. You didn't even see the toe. You just heard it from somebody, right? But if somebody says, I saw him murder somebody, that's relevant. That maybe you're going to do business with him. You say, oh, whoa, I don't want to mess with that, right? So information is different quality levels. And so when I was looking at what happened yesterday, when the market had its big plummet, it was the worst day of 2021, actually. I thought to myself, okay, what's going on? What's the situation? Just like you do with your kids. Okay, so what's going on now? Why is the baby screaming? Effectively, I concluded that the information was potentially a big nothing burger, right? Basically, suddenly, for whatever reason, on a Monday, or Tuesday, well, Monday, sorry, on a Monday, where a lot of information has been kind of piled up from the weekend because prices were not able to react over the weekend, there's this burst of emotional energy, in response to this Delta variant. And so when I saw that, I said, okay, let me go look at this Delta thing. Let me see how bad it is. How many people are dying? What are the odds that we're going to have another shutdown? How does this affect the prices of these stocks, their fundamental values? And I concluded that it really isn't going to have, I don't think it's going to have much of an impact. It could get worse, but I concluded that the market was probably going to overreact and that this would be an opportunity. And so one thing I told you guys last night, I mentioned this last night on the Black Financial Channel. I said, don't be surprised if the worst day of the year um, leads to one of the best days of the year, right? Don't be surprised if tomorrow morning you don't see a big jump in stock prices after the markets had a chance to kind of cool off, figure it out, and dive back in and look for opportunities, because there are two conflicting emotions that tend to drive trading, that these emotions battle each other out like a devil and an angel on your shoulder. Those two emotions are fear and greed. So while you're feeling the fear, in one way, it reminds me of I was in Gary, Indiana, which I love Gary. I have family there, and they were talking about these crazy drugs that some people would take. Because I hate drugs, by the way. I think the whole war on drugs was literally the worst thing anybody could have ever done to the black community, and I believe that was deliberate. Sorry, it's a conspiracy theorist in me, but I believe that. And they would talk about this drug called speedball, where they would mix cocaine and heroin together, right? Because heroin's a downer, and, and cocaine's an upper, right? And I said, who in the hell would take a drug like that where you're going up and down at the same time? You're just gonna stretch. Like how you go up and down at the same time? That's insane. You're gonna be a crazy person. Well, the stock market is like speedball. The stock market has two competing emotions that push in different directions. One is fear, the other is greed. And which emotion dominates at any given time depends on the situation. So yesterday, fear was the big driver. Fear was driving a lot of trading, there were a lot of technical reasons that the prices kept dropping. Like a lot of people have bought into stocks on margin. When there's a lot of margin and a lot of debt, those margin calls come in. You got to either come up with cash or sell your stock. A lot of people don't have the cash to back up their margin call, so they had to sell more and more and more. Also, there's just general overreaction, right? But then there's greed. Wait, don't run away. Let's not run away. Let's back away, regroup, and then go back in, right? So greed says, holy crap, these bank stocks are now 3 or 4% cheaper than they were before. Oh my God, I can buy Google at a lower price right now. So the greed kicks in, and then it creates what you're seeing right now today. But then even then, you still have an overreaction on the upside when prices go up, 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 and there's that big flush of money and profits and everything else. Well, then a lot of people end up doing what they call profit taking. That's when they'll say, okay, let me shave some off the top. Let me readjust my portfolio because now this stock has gone up so much that it's caused an imbalance in my asset allocation. So I need to shave some off. That's what money managers do. Maybe regular investors, what they call retail investors, right? Regular people with regular money doing regular stuff. So maybe the regular guy says, you know what? I made a good amount of money on this stock. I think I'm going to sell some because I want to go and get a better car or whatever, right? So then that pushes the prices down a little bit. So there's kind of this constant back and forth, this fear, greed, this heaven, hell, this speedball thing going on with stocks that's pushing the emotionality in different directions. But investing is very emotional. And one of the things that you want to avoid, in my view, is too much emotional imbalance, right? One would be driven by, in my view, allowing the stock market's day-to-day volatility to turn you into a crazy crackhead, right? You don't want the emotional ups and downs of the market to constantly drag you all over the place because you're going to lose focus on your original strategy. Also, a long-term view solves a lot of your temporary problems and your temporary questions. Like when I talk to my wife and I, for example, we have different views on our relationship in terms of how to deal with emotions that we're feeling right now. She's emotional, she's a communicator. She likes to work it all out right now and figure it all out, and she'll talk all day, etc. I'm the guy who literally says, is this conversation going to matter in 5 years? I'm mad at my wife right now. I'm really, really mad. But in 5 years, what am I going to remember about this conversation? And then I say, Boyce, you're not even going to remember having this discussion 5 years from now. So who cares? It doesn't matter in the whole scheme of things, right? So then I can just kick back and say, oh, okay, it's all right. No big deal. Okay, sure. Fine. That no problem, right? And maybe that's not the best way to approach everything, but that keeps me calm, right? Well, what am I saying there? I'm saying that a longer term perspective can help you overlook the short term things, right? If you're looking at the big picture, you're not as distracted by the little items on the big picture, right? So with investing, remember that the way people build long-term wealth is you're looking at the bigger picture. You're looking at the long-term perspective. And when you do that, what that does is that takes a lot of really complicated questions and makes them simple. If you're a day trader deciding, if you want to sell the stock at 2 o'clock or at 4 o'clock, well, those are complex questions that you have to answer on a daily basis, which will drive you crazy and stress you out. And God bless the day traders. I'm not saying that that's terrible to do or anything. It's just not something I want to do. But if you're a long-term investor, then you do something like dollar cost averaging, where you're just buying the dips. You're buying the rips. You're buying when it goes up. You're buying when it goes down. You're just consistently adding and stockpiling. And then 10 years from now, you've got $800,000 in your account because you've been very consistent. You've literally been putting the same amount of money that other people might have put into fast food, going out to eat, buying new cars, etc. And you've actually put that toward your investments, right? So that's what I'm seeing right now. I'm not surprised the market's doing what it's doing right now. The longer term view is that you still have the Delta variant out there. There is a possibility it could lead to an additional shakeup. The Tokyo Olympics is going to be a big deal. If there's an outbreak at the Tokyo Olympics, that's probably going to shift sentiment and scare more people. Because if you remember, the pandemic began. I remember the moment the pandemic got extra real for the stock market. And that moment was when the NBA announced that they were canceling the entire season. And that was shocking information. That was a surprise, right? Nobody expected the NBA to make such a dramatic move that quickly. And what that did was that caused everybody to panic, right? So it's kind of like you're in a room and you're thinking that there might be a snake in the room, but you're not sure. And everybody's kind of on edge, but nobody's running yet. And then somebody just screams. Let's say it's the leader of the group. The leader says, "Ah!" and starts running. Well, that's going to create chaos, right? So the NBA did exactly that. The NBA said, "Ah!" and they screamed and ran, and everybody ran with them. All the other businesses started shutting down the very next day because the NBA had taken the lead. So the Olympics might be in that same position. If the Tokyo Olympics has something crazy happen, there's a big outbreak or whatever, that could cause other governments and businesses to shut down. But here's the thing. I think there's a lot of resistance to a shutdown. I think that because we've endured a pandemic already, we kind of we're at least much more aware of all the other collateral damage that occurs when you shut the entire society down. You've got depressed 17-year-olds who are thinking about killing themselves. You've got people that the number of drug overdoses increased by 30%. You had all kinds of chaos happening in every city across America. You had and that doesn't even count the economic calamities of families that suddenly lost their jobs. So what's probably going to occur is you're going to have the resistance from the red states like you had before. When I went to Florida in the middle of the pandemic, it was almost like there was no pandemic. I was stunned when I went to Florida. But because when you go to New York, it's completely different. You go to LA, it's completely different. But also you're going to have a resistance amongst political leaders to shut down businesses again, because the business community isn't going to have it. They're going to say, keep us safe, but let us live, right? And that's what I think is going to occur. Why does that matter? Well, because that's what tells me that economic growth is probably going to be very strong. But also the thing I mentioned yesterday was stagflation. Stagflation is the big fear now. Stagflation is where you have a stagnant economy and inflation at the same time. Typically, when you have inflation, it comes with economic growth. You don't have stagnation. You have a growing economy. Or typically, when you have a stagnant economy, it comes with deflation, meaning that inflation isn't your problem when you have a dead economy. You're actually trying to inflate the economy the way you inflate tires on your car to make it go faster. Stagflation is when you have inflation and a dead economy, right? So not only is the purchasing power of your money dropping, but you also don't even have economic growth to go with it. So stagflation is a scary thing for economists because they don't know how to fix that. That's really a terrible economic disease for which they do not really have a cure. And that is something that is being discussed a little bit more as time goes on, because people are wondering, is this big economic boom really going to occur? I believe it's going to occur, but I also think that that the dynamics are shifting, and you got to kind of pay attention here. All right, so let me see. So what I'm going to do is I'm going to go ahead and shut down the live feed. So those of you that are listening live, if you want to join class where I'm going to answer all the students' questions and we're going to have a back and forth conversation about stocks you're interested in or whatever the case may be, go to the blackstockmarketprogram.com. The first month is free. The URL's on the screen. So I'm going to shut down the live feed and we're going to begin class right now. So